Welcome to Grow For It. It's a podcast for small business owners, managers, and professionals. The goal is to give me a chance to work with the space between your ears, on your mindset, to help you focus on the things that really matter to your success. I want to enable you to concentrate on pursuing your vision, setting meaningful goals, and engaging in the day-to-day activities that will have the biggest impact. Thanks for joining me. Well, I think this is going to be a really interesting discussion today. I've got a guest with me named Jason Hawkins, and Jason and I are going to talk about a regional view of the economic crisis related to the COVID-19 lockdown and how that's impacted large, medium, small businesses throughout the state. Jason is actually a very good friend of mine. We went to Murray State University together. We're both Sigma Chi's from down at that chapter. Jason, however, is the president and CEO of First United Bank and Trust in Madisonville, Kentucky. So what he is seeing and feeling from an economic situation might be a little different from what you and I might see and feel up here in Louisville or wherever you're listening. But I thought having his input, and especially from a banker's standpoint, might be an interesting twist on the podcast. So let's go ahead and jump in. Hey, Jason, thanks for your time, guy.
Absolutely. Thanks for inviting me, Jim.
Looking forward to it. Hey, let's give people an idea of who you are, what your background is, kind of what you do.
Sure. Just a little bit about myself. As you mentioned, spent some time at Murray State University. My undergraduate degree there is in finance, and then I also have a master's in business administration. My desire was probably not to be a banker when I was in college, but I did, throughout my college career, work for the summers at a local community bank down in Clay, Kentucky. And there, started out probably at the lowest point on the totem pole. Had lots of different jobs. I might be a teller one day. I might be balancing the bank's books one day. Next day, I might be, running the shredder or burning trash or cleaning out a storage room. So pretty humble beginnings there. And so that was kind of my view from a college perspective about banking. My dad was a banker as well, and so I thought that I don't really want to go in that direction. But coming out of finishing my master's, I was looking for jobs and got an actual job in the trust department for Old National Bank out of Evansville, Indiana, and spent 4 years there working in corporate trust, doing bond issues, escrow arrangements, a lot of different investment things from that perspective. And then was given an opportunity to go to the Madisonville, Kentucky office and work on personal trust and dealt with individual clients in the office there. Transitioned back to Evansville in 2001, and at that point in time had several different roles, working through some of the operational side of things, ended my time there as a client advisor. Got the opportunity to move to First United Bank in 2005 to establish a trust department here. And the interesting thing about a community bank is once you go to a community bank, you end up finding and getting opportunities to do lots of other things. And so starting the trust department, ended up doing some strategic planning for the bank. We had some turnover at the bank, and so started managing the bank's investment portfolio, ultimately transitioned into the CFO role, and then finally, about 3 years ago now, into the president and CEO role. So seen a lot of different things, and I guess it's kind of a start at the bottom and move your way up type of process for me.
Well, that's the way it is for a lot of us. I mean, we've all had the summer jobs, but I think you have a better feel for the overall business when you've kind of come up through those channels. You understand the different roles, responsibilities, but you've also had the opportunity to get your hands on a lot of different aspects. So it's not just one silo. And that's awesome the way you kind of came through that and then transitioned over to First United. You mentioned that First United Bank and Trust is a community bank. Can you kind of give us an idea from a banking perspective? How is that different from what I might call a large national, like a PNC or a Chase
Sure.
or something like that?
Let me give you a little idea of why First United Bank was started, and we're actually relatively young in the banking sense. We had a number of local gentlemen who decided back in the mid-'90s that all of the banks in our market area here in Madisonville, Hopkins County, had basically moved to larger regional banks. And so all of the local banks who had a lot of local decision-making basically been bought up. And so these gentlemen decided that they needed a bank here that could serve the community, that could be locally owned, that could be able to make decisions locally, and that could share the blessings that we've received back with the community that supports us. And so that is, in fact, what they decided to do. So in 1996, First United Bank of Hopkins County at that time was born. And so as a community bank, we say that we try to make sure that we are a community bank in all the communities that we serve. And that has grown over the years to several locations here in Hopkins County, 3 in fact, with an operations center as well. And then over the last few years, we've been in a growth mode, trying to move to other markets. And so we purchased a bank in 2016, Bank of Ohio County, and moved into the Ohio County, Kentucky market. And then most recently, and about a year and a half ago, we opened a branch in Crittenden County. And so we've just tried to be expanding over the last few years, but the biggest thing that we want to do is make sure that we bring local decision-making to these markets, that we give somebody a person to talk to when they come in the bank, that we have bank lobbies that are fun, that we make sure that we're not, having to, send a decision off to some other remote location to make, or that we're not dealing with, 800 numbers when people call in. So that personal touch, that ability to know our customer, to know their business, to understand them, and to be a partner with them as they try to be successful.
No, that's terrific. I love the idea of kind of keeping it local. But you mentioned you guys were in a growth mode. And for anybody who's outside of Kentucky, you may not be aware of this, but Kentucky actually has 120 different counties. So we're kind of an anomaly in that we have so many different counties throughout the Commonwealth of Kentucky. Jason, let the listeners know how many counties you guys currently have relationships in.
Yeah, I mean, at this point, Jim, while we really just have branches or bricks and mortar locations in 3 counties, we actually looked at our lending base the other day, and we have loans in more than 40 Kentucky counties. So while you might just say that we're confined to a particular area, we're actually lending on more of a regional basis than a local basis. Well,
yeah, that really surprised me when you gave me that number as we were preparing for this episode. That you guys are really servicing about a third of the state on a county by county basis. But what that does for us in this discussion is that kind of gives us an opportunity to look both at a macro level and then at more of a local level. But you're seeing this across a good portion of Kentucky. So I wanted to do a couple of things with you. One, to dive into kind of how this economic crisis has impacted your client base and what you guys have done to really respond well to that. But if you're listening to this podcast, I want to let you know I'm going to have Jason's contact information in the show notes. So if you're on iTunes, Apple Podcasts, you'll see it in the show notes. If you're on my website, jimrayconsultingservices.com, you'll see a photo of Jason and his contact information there. So again, if you want to reach out and talk to him or talk to him about some of the services, feel free to do that. Jason, that'd be okay if somebody gave you a call to do some business with you, right?
Absolutely, not a problem at all. Thanks, Jim.
No, not a problem at all. Hey, let's talk about the macro climate. Obviously, this thing, for the most part, kind of came out of nowhere, and it was really devastating in terms of what happened in both the government's response by really putting this lockdown across Kentucky. It's not a political statement. It changed the environment. Things changed almost overnight, and then the SBA and the government funding came through in a couple of different tranches. And, how much of a challenge was that from the banking industry?
Well, and not only was it a challenge, it continues to be a challenge, Jim, in the relationship and how they're trying to get money to local business. Obviously, the Treasury came out and with decisions implemented by Congress, and Treasury was, purposed to essentially try to get loans out to small businesses. The mechanism that they used was a Small Business Administration. And unfortunately, the Small Business Administration, while they have a network and a framework and their desire is to help small business, this was just overwhelming to their equipment, to their systems, to their processes. And frankly, it's been a huge learning curve. In addition, guidance has been slow to come out. It has been, they keep adding things on a daily basis. They keep revising things. They keep creating new rules and relaxing things here and there. So it's just been difficulty. Typically if the government institutes a program, they may take 6 months, 9 months, 12 months to try to implement it. In this case, they had 2 weeks. And so the information and the process was less than perfect. With that being said, we've obviously had 2 rounds of PPP or payroll protection loans at this point. And those 2 rounds have been largely successful. However, just with round number 1, I heard Congressman Andy Barr make this statement, so I'll attribute that to him. The SBA in the first 14 days of this program made more loans than the SBA had made in the last 14 years.
That's an amazing
and so that
statement,
just shows you the monumental impact of how many loans, how much money was going out, and all of these banks across the country, thousands of banks scrambling to try to figure out the rules, make loans, get money in people's hands without perfect knowledge of exactly how it was going to work.
Well, I think to that point, I've had a couple of other related industries on this podcast in the last month or two. I had Tommy Causey and Dave Edkin, who are related to Tommy works directly for the SBA out of Louisville here, and David Edkin for the Small Business Development Center, SBDC. And they were really proud of the work they did to funnel that money through. And a lot of times they worked with the banks to kind of get it into the ultimate consumer's hands. But I also had my CPA Steve King on here, and we talked about it from an accounting standpoint. And one of the biggest concerns was the U.S. Treasury had not really told the banks how to treat this money and what are the guide rails and the requirements. So when that guidance was so slow to come out, I think you'd mentioned that earlier, it was frustrating for a lot of people, not just the business owners trying to get the funds, trying to figure out what's forgivable, what's not, how do we ensure that it's forgivable, or at least have the best chance of doing that. But then everything seemed to change under their feet, based on the FAQs that are being updated by the U.S. Treasury. By the way, I'll also put a link to the latest version of that. The U.S. Treasury uses an FAQ, frequently asked questions list, to update as new guidance comes out, and I'll post that in the show notes as well if you're interested. But yeah, you guys did a monumental lift here in terms of the volume, in terms of the speed of getting all those funds through the system. I mean, you guys literally ate the elephant, and that was amazing. So I'm sure that we'll talk about how your company dealt with that specifically, but I mean, just in general. I was really surprised at how quickly that happened. One of the things I always wondered from your standpoint is, with all the loans that we're going through, did the relative dollar amount, did the size of the loan requested have an impact on speed from your standpoint?
Honestly, Jim, we looked at it from basically a first come, first serve basis. So nothing, in how we process anything related to the size of the loan. We just tried to deal with customers as as we received applications from them. So as we got an application in, we would put it into the queue and we would process it, when we, had the first opportunity to do so. And believe me, getting access to the portal and to the system through the SBA was fairly difficult early on.
Was that the E-Trans system, or what was that?
Yes, that's the E-Trans system that we're talking about. And so just getting access to that was, difficult in the beginning. And then there have been times when the system has been bogged down or crashed. Yep. And so it's been a process for sure.
Well, again, you guys really did a lot of great execution at the local level. For people listening, I mentioned this in a previous episode. I'm with a larger bank, but they had trouble because of the onslaught of getting my application to me, getting it processed, and delay. Finally, they said, "Hey, we're sorry, we're just not going to be able to get to you." So I went across the street to a local community bank, and literally within a matter of hours, I had the loan approval numbers, and with a matter of days directly thereafter, I had money sitting in my account. And I was just really, really surprised how quickly a community bank can move this through the system, whereas a large bank tends to get bogged down for a lot of different reasons. The approval process must have been different. You had mentioned in the pre-show prep that these loans are SBA backed. So did that make it a little bit easier for you guys?
Yeah, I mean, ultimately, once we got guidance from the Treasury and SBA on what their guarantee was going to cover and what assurances that we could rely on from borrowers, it certainly gave us a higher degree of comfort. Basically, through their FAQs that you talked about earlier, both the Treasury and the SBA have indicated that banks who make loans in good faith can certainly rely upon the statements that are being made by the borrowers, the certifications that they're providing. And then as long as we act in good faith, then we can make these loans with 100% guarantee through the Small Business Administration.
So from a practical standpoint, if you were out at a normal standpoint and somebody comes to you and applies for a loan, you've got to worry about their financial wherewithal, their ability to repay the loan, their ability to survive the climate, whatever that might be. And if they go bust, that's money that you have hanging out there. But with this situation, the SBA basically stepped in for the bankers and said, "Hey guys, don't sweat it. We're gonna basically guarantee these." Is that kind of, in essence, what happened?
That's exactly right. I mean, it certainly doesn't give us a license to go out and have some type of fraudulent activity with this. But it says if we act in good faith and make these loans based upon the assurance and we know our customers, then ultimately we can make these with the knowledge that the government's going to make us whole for any losses that might be incurred.
Well, that's fantastic. I guess that's why you guys executed the way you did. Jason, let's transition here a little bit and talk about the local economic client. Again, you guys are servicing clients in about 40 different counties, a little bit more than that now. Kind of what are you guys seeing? Because obviously you have exposure to market segments that are different, disparate. But kind of what are you seeing? At least here in Kentucky.
In Kentucky at this point in time, we have a number, like you indicated, we have a number of retail borrowers. We've got borrowers that are in the hospitality industry. And certainly with many of those types of entities, obviously they have had to have some payment relief through this process. One of the things that we've tried to do is provide deferments on payments. We've typically allowed up to 90 days of payment deferral to help them through this process. We required them to basically be current in order to get that, meaning they had to pay through their March payment in most cases to be able to qualify for deferral for the months of April, May, and June.
Right.
We've had about 400 of our loans right now that have gone through that process. At this point in time, we've really not seen any pickup or issues with delinquency at this point. However, depending upon the length and depth of what is occurring, in the local economy, that may become a little bit more of a challenge as we move forward. And so we're continuing to monitor that. I just had a board meeting yesterday, and all of our board was very concerned at the, what the lingering impacts of this will be. I mean, we have weathered the storm. We have not had really any payments missed at this point in time, but as this continues on, that does continue to provide us a little bit more concern.
Yeah, I think that same issue was voiced by some of my other clients. I deal with a lot of attorneys in law firms, and I bumped into one of the guys at Kroger grocery store the other day, and I asked him just how he's doing, and he said, I'm in there fine. I had a backlog of cases and stuff that are working its way through the system, so I'm not really feeling it now. He said, but literally a year from now is when I'll see this bubble, this gap, from new cases having been generated and other things happen. I've had a number of people concur with that statement that, it's, as long as you've got inventory and you've got orders there that are fillable, you're doing that. But it's that future bubble that's going to be really dangerous. So we've weathered this part of the storm, but there's something else coming, I think, which is probably making a lot of people nervous.
That's exactly right.
Are you guys seeing any of? I mean, obviously, hospitality industry got hit pretty heavily, and people aren't traveling. A lot of the banquets and different conventions and things like that got canceled and laid back. What about some of the other industry segments? I mean, we have automotive here in Kentucky. We've got just a lot of different things. Anybody kind of a little bit more hard hit than the others?
Most of what we do from a lending perspective is really a lot of mom and pop type stuff,
Yep.
and that absolutely is getting hit heavily through this time frame. We've had several actually in the restaurant type business that have tried to limp along, tried to provide alternate means of serving their customer base. We're starting to see some of them reopen and be able to, have curbside service and those things like that. And so at this point, they've been able to survive, but I don't know for how long as this continues. And so we're just continuing to monitor those relationships, continuing to reach out and making sure that we're staying in close communication. That's the nature of the beast right now, is we want to communicate and communicate often with all of our borrowers.
Yeah,
and,
I would think so.
We're asking them to do the same with us, too.
Yeah, get out in front of something before it becomes a crisis. Jason, with this PPP program that was launched, I think you said you guys did a pretty substantial number of loans, and the dollar amount was pretty large, wasn't it, for one bank?
Absolutely. We're about a $330 million bank, Jim, and so we've done about $25 million in PPP loans, which is in excess of 300 loans.
Yeah.
Most of those have been, smaller loans. I mean, like you were talking about earlier, we've got some that are, in the couple of $1,000 range, and we've got some that are in the, $3 and $4 million range.
Right.
And so it's just been a mix of different things, but most of ours are really to small operators.
Man, you had your hand in this. Big time, all the way, varied segments, varied amounts. So you're seeing a lot of different concerns being raised by your client base, not just one type of client.
Absolutely. And they've all been very appreciative and thankful, for the opportunity to get this. I think that there was, obviously with round number one, there was extreme concern with the finite amount of money that was allotted to the program. That concern has dissipated with the second round, and we've really worked through any backlog, and we've gotten everything approved that has come into us from an application perspective at this point. So kudos to our team, because they've had to work a lot of long hours.
I would think
I'm
so.
sure if you talk to other community bankers, they'll say that they had people work on weekends and nights trying to make sure that they could get these applications in and get them approved for their borrowers.
Well, and I wanted to transition the conversation toward that direction. Some of the changes and challenges that you guys have had to endure or take on. I know you said that for First United Bank, this massive amount of income has really messed with the I guess you call it the capitalization ratio, capital ratios.
Yeah, ultimately this is wreaking a little bit of havoc with our balance sheet overall. Taking us again as just over a $300 million bank and dropping in $25 million of additional loans does wreak havoc with the ratios. In addition to that, many of these many of these borrowers, are actually opening up deposit relationships. So we're getting an increase in loans corresponding with an increase in deposits as well. Our capital ratios are something that the regulators look at, and as our assets have grown over this period of time, our capital has stayed relatively consistent. And so just by the sheer math, that ratio of capital to assets, we are seeing lower capital ratios as a result of this. And so we had, again, in having that board meeting that I had last night, in talking with our board members, that's one of the concerns that we have. We want to certainly stay above a 10% capital to assets ratio. And there's a number of things that banks look at in addition to just that pure ratio there. But
basically, that cap,
obviously it's difficult right now.
And Jason, basically that cap ratio is basically the cash on hand that a bank is required to have to cover outstanding loans or just capital requirements. Is that really what this is?
It's really just, it's just a capital requirement. What they're trying to do from a regulatory perspective is make certain that we have the ability to absorb losses should they occur. Okay. Obviously, we have a reserve that they require for losses on our loans and leases. But in addition to that, the regulators look for, in a sense, a capital buffer that allows us to continue to operate and not fail in the event that we have losses that are, extraordinary.
Right. It allows you guys to take a punch, but also remain liquid at the same time.
Correct.
From that standpoint, what are the things that and again, I'm gonna come back to this because I had not worked with a community bank before until this crisis really kind of pushed me that direction. Why do you think the community bank had such a competitive advantage against the nationals?
Well, I think that there's a couple of things going on there. Number one, we're nimble. We don't have to work through a lot of red tape. We don't have to call committee meetings with people across the country. We're able to, get in a room, make a decision, decide how we're going to operate, and then put that into action. And so community banks have been very successful in being able to do that because we can turn on a dime, so to speak, versus trying to, turn a huge ship around. Right. We're able to motor around a little bit and navigate a little bit better. In addition to that, I think that the other piece of that is, our connection with our customers and knowing them. We were literally reaching out to customers. We were getting calls on cell phones. We were getting calls after hours. And so we were, again, just making sure that we took care of the needs that we had. And so I think that's the difference in what you're going to see from a community bank versus, a larger bank that has to, again, create processes and procedures that can be implemented across a larger area.
Right, and I would imagine just the sheer scale of the applications they had that hit that system all
Absolutely.
At once. You guys were, like you said, a lot more nimble and reactive at the local level, and I know for one, I appreciate that. You and I didn't do business in this process, but I really appreciate what the community bank as an entity was able to do, as are a lot of my colleagues, I would imagine. Hey, Jason, looking forward, kind of what's your outlook? What are you thinking about? What are the things that you're trying to do to, again, as we've weathered, the first part of this storm, kind of where's your mindset right now?
Well, I think that, if we're looking at where our focus is going over the next few months is honestly the forgiveness piece of the PPP loans and trying to work through that. We're still getting additional guidance. We got to the application was sent out through the SBA last week, and so we're still working through that. We think that there are going to be additional things that come for that forgiveness process. And so obviously that's going to be a concern to work through because obviously we want our borrowers to get access to the most forgiveness that they can, realizing that based upon the way that the math works and based upon what we're seeing right now, we think, forgiveness is probably going to run anywhere between that 70 and 90% range. And it will all depend upon documentation and working through the process, which is probably going to consume efforts over the next, 4 months or so.
And is your team
beyond
working?
that? Excuse me, I'm sorry.
No, so I interrupt you. Is your team working with the client to help them navigate through this? I mean, do you guys have that type of service available?
We are honestly in most of the situations that we have, our customers have worked with their CPAs and financial advisors to assist them in the preparation of the application. What we're now doing is going back and advising those intermediaries, if you will, the CPAs and financial advisors, along with the customers, to tell them, here's what we know today. Here's the fact that we know that it may change as we get additional guidance on this. But as we know it today, this is what the forgiveness piece entails. And then from there, here's the documentation that we think we're going to need. And they're going to need those documents in many cases from those that provide them. For example, the payroll information, the 941s, you're going to need that information from whomever prepares that for each local business. So they need to be in close communication to make sure the documentation is there.
And so as we were preparing for this, I know you kind of said, really, I've got kind of a cautious posture moving forward. I mean, there's still some landmines out there, but there's still a lot of unknowns.
Ultimately, from a lending perspective now, the Fed obviously wants us to be making more loans. Loans tend to indicate growth, tend to indicate revitalization, hopefully moving us out of what is most likely a recessionary time. And so at this point, though, we're looking at things and saying, we've got to be a little careful in, the lending process and what we're doing from a credit perspective. And so our standards, when rates are obviously low, I mean, theoretically, we should be able to make more loans. However, we're tightening some of those credit standards just simply because of the uncertainty that is out there in the market. And like you said, we're cautious in trying to measure that risk. Yeah. Our goal primarily through this process, as I've talked to my team, is we really wanted to make sure that we take care of our current customer base first and foremost, and not worry so much on the new business development piece of it right now, simply because that's kind of a secondary objective at this point.
Well, I think your ability to kind of keep your ears to the ground, not just because, again, the geography that you guys cover is a little bit less than what a national might be worried about. You're probably going to see the signs earlier and be able to respond to them a little bit quicker than waiting for something to pick up on a national trend or an uptick here or there on some kind of metric. You're probably going to see and feel those a little bit quicker.
Absolutely, and I think part of that is just knowing our borrowers, a little bit better, and being able to, visibly be in their backyard and see if they're having their doors opened or not, and see what their numbers look like.
Well, and that comes down to the value of those relationships, I think, that you guys really try to foster and develop.
Absolutely.
Well, fantastic. Hey, Jason, we're at about the half-hour mark here, and I really appreciate your time. I would like to ask for one more thing, though, if you don't mind. From your standpoint, do you have any words of advice for a small or medium business out there, a business owner who's really kind of going, I'm just not sure what to do or what's coming next? I mean, do you have any words of advice?
At this point, I would just say, I'm going to put in a plug for the community banks out there. We've talked about that throughout this process. Your community banks want you to be successful. They want to make sure that you succeed because that's good for the community. And so please be in contact with those community bankers and those centers of influence. Again, I think we talked about earlier as well, as communication is key. If you are having a problem with your business, it is much better, and banks are much more favorable if you communicate and tell us, here's the issues that I'm having, here's the struggles, here's the frustrations, here's what my cash flow looks like. We're much more willing to work with you than if you try to just say everything is fine and move on. Obviously, we want you to succeed because that helps us succeed. And so we want to view it as a partnership, one that is mutually beneficial to both of us.
Well, I think with your experience and your team's resources, you probably bring other perspectives to the mix that maybe the small business owners, unfortunately starting to suffer from some tunnel vision right now. You might be able to bring some new perspective to the situation and show them a way forward.
Absolutely, and in a lot of times, one of the things that I've told our lenders, and we again look at it from the perspective of, we're not just out there to make a loan. If it's not the right thing for a business, or if we have a suggestion, or if the structure that they're talking about isn't workable, then we'll advise them and we'll say, you might want to think about it, doing it this way, so that it's not. We're not trying to make to always say yes to everything that they want to do, but rather doing what's right for them.
Well, and I know with a small business, I mean, sometimes, we haven't weathered all these storms in the past. You guys have some longevity out there, and we can actually rely on that. So it's a terrific resource. Hey, Jason, once again, I really want to thank you for your time today. Thank you for your advice. Thank you for your input on the podcast today, and I hope people out there found some value in this podcast. I will once again make sure that Jason's contact information is available in the show notes for this episode. I'll also have a link to the U.S. Treasury's FAQs, which again is where you kind of see some of that guidance. It's probably a good idea to talk with your internal financial people as that comes out. Those are revised with some level of frequency. And just be abreast of what's going on. But once again, I hope you found some value in today's podcast. My buddy Jason down there in Madisonville is willing to help, willing to talk with people. And when you're ready, let's grow for it.